So digging into Fibonacci's and how we utilize them on the chart, the Fibonacci retracement tool is basically a tool that's going to help us determine how deep the retracement may go, right, before the continuation continues. So for instance, we know that we're looking for an impulse to tell us the direction the market wants to go. After that, we're looking for a correction to confirm that the market still wants to go in the impulsive direction. Okay, but how do we know when this pattern is over? How do we know when price is ready to turn around? What is most likely the area that price is going to turn around and finally give us that continuation, which we're really looking for and we're being patient for? How do we know when we're supposed to be entering? Okay, so that's where the Fibonacci tool comes into play. If you come over here on the left side to the third tool icon down, hit the arrow and come down to Fibonacci retracement, you can see this. I use Alt F as a shortcut as opposed to clicking over here every time. You can also make it a shortcut up here by just favoriting it, making it a favorite. All right, but basically how you want to utilize this, if you have an impulse going up, you want to draw your Fibonacci starting at the bottom of the impulse and take it all the way to the top of that impulse, right? But you do not want to do this until you have some corrective movement. So you will not be drawing your Fibonacci's until your correction has begun, until you see small candles that are retracing. You see small candles that are coming down, at least in this bullish example. Okay, once you see that, okay, my correction is starting to form, I go ahead and grab my Fibonacci, start it from the bottom and take it to the top. All right, now when we look at this Fibonacci's, I'm gonna go ahead and bring up my settings so you can see how I have mine set up. I like to keep it all one color so it's not distracting. Keep it pretty simple. You can see, like, when I actually trade, or at least on my live sessions, I have black and white as my candles. That's what I like on my chart. I like to keep it as simple and plain as possible. But let's go ahead and talk about these levels. Now here, the 38.2, the 50, the 61.8, those three Fibonacci levels are your key Fibonacci levels. These Fibonacci levels are most often where you're going to be entering, and primarily you're going to be entering off the 50 and the 61.8. Right, those two are very, very vital, and that's where you should really be paying attention to what price is doing and really looking for an entry in that area. Yeah, now the 38.2, if price comes down to that and gives you all your confirmations for a setup, that is basically going to be a quick retracement, right? You see that often in the high and tight flag. If you go to FinViz, there's a very detailed explanation to that. Now the 50 Fibonacci level, price is typically going to take back 50% of its move. So basically, after the impulse, you're going to have a correction, and price usually retraces to this 50 Fibonacci level. You'll find a lot of patterns come to this level before turning around for that continuation. And then the 61.8 is the golden ratio, and all that really means is that a lot of traders are basically getting in the trade at this point. They're putting in their buy orders at this point. They're done waiting on their hands. They're going to enter off this level. Okay, and then you have these two deep retracement levels, the 78.6 and the 88.6. Also, you want to include the 1 as well, because as we know from the first lesson, if price comes down to the bottom of this impulse and breaks it, if it goes below the bottom of the impulse, that's when we know it's time to stop looking for this buy setup and it's time to move on and find a new setup or go to a different pair. Okay, but these two are just hot. These three are basically your high probability areas. Basically, it's where you have a lot of should have a lot of certainty in what's really going on or the next move. It's a greater probability of actually playing out in your favor. But let's say price retraces down to the 61.8. Okay, and in this area we're going to make sure it lines up with a kill zone, and we're also going to look for an entry pattern in this area, which should be broken down in the next few videos. And once we get all those confirmations, that is actually the area that we're going to be entering. And then if we enter down here, the first thing that we're going to do, we want to bring our stop loss below the next Fibonacci level. So if price were to continue down, what would be the next Fibonacci level that it hits? That is the 78.6. So we want to ensure that our stop loss is below that next Fibonacci level, because essentially what we're saying when we enter a trade, we're saying, at least with these Fibonacci's, we're saying, okay, price is probably not going to go to the next Fibonacci level below it. It may play around within the space between these Fibonacci levels, but probably won't go below it. So I'm looking for price to actually reject the 61.8 and continue up at this point. So it's logical to base your stop loss off these Fibonacci's if the Fibonacci tool is actually accurate in depicting where the market may turn around from the pattern. Okay. Now, after we set our stop loss, after we got our entry and we set our stop loss, what we're going to do now is look for a take profit, and we have 4 take profit areas. We have the 0, which is basically the high of the impulse. We have the negative 27, we have the negative 41, and we have the negative 61.8. Right? Those are all valid take profit levels, and you obviously want to be smart about it. Obviously, if there's a supply and demand zone that's let's say you want to target the 61.8, but there's a supply and demand zone like right below the 41. You know that's an area of high resistance, so probably price won't actually break it and get to that 61.8. So it may be safer to just settle for the negative 27. All right, just use your chart reading skills that you've already developed, understanding what each line or everything that you've drawn on your chart actually means, and react to it accordingly, instead of just mindlessly saying, oh, my Fibonacci say this is a good target, so I'm gonna set that target. Right? Don't be mindless about it. Think through what you already have on your chart. So that is a bullish example. A bearish example is just upside down, not complicated at all. We get an impulse down, we look for a correction, we see our correction has started. So once our correction has started, we take our Fibonacci's, take it from the top to the bottom, and we are connecting wick to wick, and we're looking for an ideal area or ideal level that price could potentially come to and reject. And let's say for this example, price comes to the 50, formed a flag, came to the 50, and played out. So we're looking in that area to actually enter. And that's where we would look for our kill zone and our entry pattern in that situation. All right, so let's find a few examples. Yeah, here's a perfect example actually. So So I really want to take this from a higher time frame, but we'll just start it from here. Okay, we'll say this is our impulse here. Take it from the bottom of the impulse all the way to the top wick of the impulse, right? You can see I'm taking it to this wick, right? So basically when I say the top of the impulse, I'm saying the top of the pattern as well, okay? Unless it's an expanding triangle. But if you have a flag that's developed, you're basically taking it from the bottom of the impulse to the top of the impulse, wick to wick. Hope everyone sees that, understands that. We can see here price retraced down to the 61.8, slightly down to the 78.6, but didn't really get down to that area. You can see it came down to 61.8, and if it did give you an entry pattern, let's say it gave you an entry pattern over here, let's just imagine it did, our stop loss would be below the 78.6. And you're saying, okay, I'm looking for price to reject the 61.8, and it's most likely not going to come down to 78.6, so I set my stop loss just below that level. And you can see price did come down lower, but it didn't quite reach the 78.6, so your stop loss was never in danger of getting hit. You were just in a little bit of drawdown. depending on the type of trader you are, hope you can stomach just a little bit of drawdown for a potential turnaround like this. All right, but that's how you utilize it. Let's find a bearish example, which another pretty good example. Actually, this is even better right here. Let's go to the Fibonacci's. We can see here we have a nice impulse down, and we have our pattern here. It's a flat pattern. Let's see what Fibonacci level it retraced to, if it did retrace to a Fibonacci level. Down to the wick. We can see it didn't quite come to the 38.2, so in this situation we actually wouldn't even take the trade. Okay, if price doesn't retrace to a Fibonacci level, we do not take the trade. Okay, we want to make sure all of our confirmations are hit. Again, I'm giving you the list of confirmations and I'll give you them in order. You have your impulse, you're looking for a pattern to at least have started. Then you want to have your kill zone at least established. You want to have your Fibonacci's, and then you're finally looking for your entry pattern. Those are the 5 confirmations. All right, impulse, pattern, kill zone, Fibonacci, entry pattern. JCP is what I will call it. So let's find a bearish example that did play out, which this one looks really good. And it looks like, kind of looks like a, no, that looks like a daily pattern. Yo, okay, so trend line, we have this impulse down, we have a pattern here, and we're looking to see if this retraces to a Fibonacci level, just as a little confirmation to see how this works. You can see price came down, gave us this pennant, came to the 50 Fibonacci level, and played out all the way to the 61.8 take profit level. Okay, so that's how you draw it, that's how you use the Fibonacci. And again, you do not want to draw fibs until the impulse is played out and the correction has at least started. You want the pattern to at least begin to retrace. All right, you do not draw Fibonacci's until the pattern has begun to retrace. So that's that on Fibonacci's. Hope this helps. Catch you guys in the next one, and in the next few videos we will be putting it all together so it flows all together, so you can see how to utilize the strategy when you actually come to the chart to trade it.